With Uganda's tax-to-GDP ratio still standing at 14% below the peer countries and government's own target of 16 to 18%, Uganda needs to raise more money domestically. Civil society groups are calling on to government to go tougher on multinationals that exploit tax loopholes through international agreements.
Why aren't we taxing at source? One is the double-taxation treaties you have signed between your country and the other country. Chances are high that you have DTAs that are giving the right to taxation on the resident best than the source best. So if that is the way you are going to trade off your taxing right.
There are companies here in Uganda that have been declared losses to revenue authorities, but when they go back to their home countries where they're registered, they declare profits and dividends to their shareholders. So it cannot be that in Uganda, where you have corporations, you made a loss, but when it comes to your shareholders in Ireland, in Netherlands, you're telling them actually we have a global profit and then this is the dividend we're paying out. So it means that then there should be some sort of sharing of information between Ireland and Uganda.
Economist Fred Muhumuza says high net worth individuals and specific sectors should be targeted more effectively because one multinational or one high income earner can contribute tax equivalent to what millions generate in the informal sector.
Failing to tax high net worth is political protection. And unfortunately, most technocrats don't want to engage in the politics. They have let it pass. Because either the politicians are their employers or they fear them or sorts of things, whatever it is. Sometimes we haven't found a right way of engaging technocrats and the politicians to get a good result for the country.
The tax authority says it now has a dedicated office to handle multinationals and ensure that the country taps into the segment more efficiently.
These are companies that don't have physical presence within a country, but with the digital service tax rules and provisions within our current tax laws, we are able to establish them and be able to get a fair share of their tax treatment within the country.
Amidst rising expenditure needs across the EAC region, domestic resource mobilization remains low, stressing the urgency for stronger tax policies. Ran Habwe, NTV Business.